International Investors Monthly Commentary. During the month of November, MENA market witnessed a negative performance as the S&P Pan-Arab Index lost 2.9%. The main reason behind this decline was the geopolitical concerns and the drop of oil prices, which actually lost 10% during the month. The worst countries, performing countries were Qatar, Egypt and Dubai. Didier, can you please tell us what were the main events that happened during the month?
MSCI rebalancing was one of the key events which happened during the month. Overall, the MENA market witnessed outflows of around USD 133 million, excluding the new additions and deletion. This was mainly due to the inclusion of Chinese overseas stocks in the MSCI EM index. Etisalat was a key entrant into the MSCI EM index, and the stock has the highest weight among the regional names which are part of the MSCI EM index. As a result of Etisalat, Abu Dhabi stock market outperformed Dubai. The Abu Dhabi stock market declined 2% when compared to Dubai, which declined around 8.5%. Qatar market also came under significant pressure as some of the key names suffered, especially during the end of the month, and the country's DSM index declined 13% in November.
Egypt lost around 16% during the month. Can you shed the light on the overall market performance?
Yes, EGX 30 index declined significantly during the month, mainly due to the devaluation concerns and geopolitical risk. Post the crash of Russian plane in Sinai, which was regarded as an act of terrorism, Russia suspended its flight to Egypt and UK suspended its flight to Sharm el-Sheikh. Based on Egypt's tourism minister, the country is expected to lose around 281 million in the tourism receipts per month, which is equivalent to 1/3 of the total tourism receipts. Also, in a surprising move, the Central Bank of Egypt strengthened the currency to 7.73 against the dollar versus 7.93 previously. This is actually a surprising move because if you compare with the last month, the central bank actually led the currency to decline, and the current official rate is still far away from the black market rate of 8.6.
David, do you think the attack on the Russian plane will have further effect or deterioration or pressure on the foreign currency reserves for the country?
Yes, tourism reserves are a key source of foreign exchange for Egypt. If you look at the current foreign reserves of the country, they are right now standing at around $16.8 billion, which is equivalent to only 3 months of the imports. So, considering the expected decline in tourists, the country is going to face significant challenge in managing its foreign reserves.
The Omani market lost around 6%. It was a bit strong for the market. So, can you give us a bit of an overview on the market?
Yeah, Moody's cut the banking system outlook to negative from stable, mainly due to the expected slowdown in the lending growth and also the pressure it expects on the funding cost and the asset quality, and also the government ability to support the banking system is weakening.
Saudi was able to outperform the rest of the market, and the index, the Dow index, was up around 1.3%. What was behind this outperformance when compared to other GCC markets?
After declining for 3 months consecutively, Saudi market witnessed a bounce back in the month of November. We believe investors are in cautious mood ahead of the next budget, which is to be announced in December. And also the investors are expecting some key steps to be taken by the government towards fiscal consolidation, such as cutting the energy subsidies. The government is planning to privatize its airports and related services starting first quarter of 2016. The government is also looking to address its fiscal deficit by issuing foreign currency bonds next year.
That's all for this month, and thank you for following us.